Consumers better brace for what China just announced against Walmart. Hey everybody, you're watching Bull Boom. Bear Bust back with another dose. BX4 News back in the building. Ride the bull, prepare for the bear. Let's go ahead and get into it, folks. We have an economic battle happening right now, and this is one of the biggest shakeups we've seen in the financial world, in the economic world, whatever you want to call it, in my lifetime. And I think probably most of your lifetimes as well. And we've got more to add to the stack of uncertainties and threats. And we're going to talk about Walmart, China, and to get into that here. But first, let's go ahead and start right here with the stock market. Slight recovery here recently. And we had speculated here in this channel that this could be the top back here, what we saw in mid-February. And I'll be really, really surprised with all the money that's being pulled out of the economy right now with all the cuts. I'll be really surprised if we see the stock market hit all-time highs once again. This right here is a chart of the S&P 500, a year-to-date chart. Going over to the Dow Jones, year-to-date once again, we see a similar pattern. Highs back in January, mid-February, big drop, and then a slight recovery. Well, we recovered about 1/3 of the drops that we've seen since that high. So will we go on to all-time highs? Please let me know what you think down in comments. I would say no, because of, again, all the money being pulled out of the system here, all the job cuts, all the agencies being cut. And when you cut off that type of money, even though it's really not economic growth, but a lot of spending is going to be pulled back, and what they consider economic growth is going to be gone. Because when you cut off that many jobs and that many people losing their jobs, that's less money spent in the economy. When the economy is based on spending, then there you go. It's a pretty simple formula if you ask me. All right, and also a lot of these programs that were being cut, a lot of these wasteful programs that we've talked about here many times, where money sent all over the world for programs that if you knew what they were funding, what you were funding, if you had to actually reach in your wallet and give money for these programs, you would never pay for these programs. I mean, some of them are a joke. I could tell you again what they were, but I think most of you probably heard these many times on many different channels. We're funding all kinds of crazy programs across the world, and again, most people would not pay for these if they actually had a choice. But when it's out of sight, out of mind, when they're just taking your money, they're taking a cut of your paycheck. Most people don't realize it, and when they're just running up debt, so really you don't even have to pay for it. Right, the taxes they take from you are just part of what's being spent here. We have the borrowed money, which is most of the spending and what's funding most of these programs. And we talked in our last report about how the debt is still expanding very rapidly, and actually it's increasing. Even though they're saying they're cutting, we're seeing the debt continually being increased, debt ceiling increased, spending programs still have to be passed. So something is very strange happening right now. But with all that, I still don't see that money re-entering the stock market. I could be wrong, and this thing could go on at all-time highs at the click of a mouse. They could click $1 trillion on the buy side and push these stocks to all-time highs. That's how much it's actually manipulated, folks. And if you don't understand that yet, just look up fiat currency, and you'll understand what I'm talking about. All right, moving on here, folks. Let's talk about what the talking heads are out there saying, folks. And this is not good. We talked, 2, maybe 3 reports ago about how the word transitory is back. And that's what they used back in 2020, 2021, because they didn't know how long inflation was going to last, or they knew and didn't want to admit it. All right, we told you here inflation wasn't going to go away. They were just going to see costs rise exponentially because the banks aren't being restrained enough. And they're telling you that there's more regulation on the banks. There's actually the least amount of regulation on the banks than we've ever seen in decades. And this is because the banks basically have been given a permanent get-out-of-jail-free card, or permanent life raft, whatever you want to call it, life support. But here's another term that's also jumped back into the talking points here. Sticky inflation. Remember that? Was that just a few years ago? First it was transitory, then it was sticky, and now they're using the same term. Sticky U.S. inflation and tariffs are keeping the Fed sidelined. They're talking about rate cuts. Everybody's looking for rate cuts, right? The stock market's looking for rate cuts. Why would low rates be positive for the stock market? Because more people can borrow money. And actually, the big institutions that are buying stocks are borrowing money to buy stocks, right? And then when the stocks get pushed up, then they sell. They try to pay off the loans that they borrowed to buy the stocks, and the game continues, folks. And usually the big investment firms, they get out first, and the little guy, the middle class workers, left holding the bag. Of course, then when the market drops, then just like we're seeing here recently over the past few days, the big buyers come in, the whales, the big investment firms, the multi-billion corporations, multi-billionaires, they come in and buy the dip and push the market back up. And then the question is, when will they sell again and take their profits, right? So it's a big game, folks, of basically dangling the carrot in front of the rabbit. Sticky U.S. inflation, summer cuts coming, sticky inflation, all these different outlets are saying the same thing here. The Fed cut's still on the table amid sticky inflation. That's TD Securities, Yahoo Finance, BlackRock's Kate Morse's sticky inflation. It's interesting when all these different places and people are using the same exact term and phrases to describe what's going on here in the economy, isn't it? All right, before we get into the Walmart stuff, something just was revealed recently that we said was going to happen here on this channel. We said that Texas was going to be the epicenter for evictions and the housing downturn, right? Now, it doesn't mean there's going to be a bursting of the housing bubble. It's going to be pretty much local, but Florida and Texas saw some of the biggest price run-ups over the past 4 to 5 years, and now we're seeing what's happening with evictions in Florida. Landlords in Travis County, I'm sorry, this is Texas, but Florida is the other one we're going to talk about. Landlords in Travis County filed a record number of evictions last year. I remember when I told you that was going to happen. I said we're going to see new records of evictions, and we're seeing this not just in Texas. But folks, think about all the programs that were supposed to fix the problems. Did they fix anything? No, we're right back where we started. A record number of evictions, worse than prior to the health crisis. So you could argue that the steps that were taken after the health crisis just made things worse. They made people more dependent on these forgiveness programs, these assistance programs, and these help programs, these life rafts. And people just don't know how to get by on their own now, and they just can't do it. So they have to have all these student loan debt forgiveness, all these programs to help people. We had eviction moratoriums for years, and some cities still have the moratoriums as of today. I'm not even joking about it. It's almost like once you give the support, you can never pull it away. Otherwise, the person's going to drown, right? If you don't teach the person how to swim, if you just give them a life raft forever, they're never going to learn how to swim. And then when you pull that life raft away, they're sinking, right? That's what the economy is like. A lot of these people just cannot get by without the assistance. Record number of evictions. Landlords who own property in Travis County filed more evictions in courts last year than they have since 2014. Landlords filed over 13,000 evictions in 2024, an increase of 25% from the year before. So there you go again. The programs did not fix the problems. They just prolonged the day of reckoning, and tens of thousands of people are now seeing reckoning across the country. This is just one county in Texas, but you multiply this, it's millions of people on the brink of eviction, if not already being evicted. When you look at the national number, we're also seeing an uptick nationwide, right? This is just one of the worst counties, so I thought I would point that one out. But folks, what's the saying go? Teach a man how to fish. Give a man a fish, he'll eat for a day. Teach a man how to fish, he'll eat for a lifetime, right? Nobody's being taught how to fish. They're being given the fish. And all these programs are just essentially the same as giving somebody a fish instead of teaching them how to fish. And you would think that a nation with 30+ trillion dollars in debt would have all kinds of programs to teach people how to fish, to teach people real life working skills. But no, you have to go to a university and get into $10, $20, $50, $100,000 worth of debt to get a job that actually pays decent. That's not totally true, because you have a lot of blue collar jobs that people just do not want to do that actually pay pretty good. Air conditioning, HVAC people, heating systems, roofers, contractors make a lot of money, but people don't want to do that. Most people that I talk to, especially the younger people, they want to be a YouTuber. They want to be an influencer. They want to be a sports star. They want to be, something besides working physically hard. They don't want the blood and the sweat. They want kind of the glamorous thing. And I'm not saying what I do is glamorous. I'm just a small channel on YouTube. But a lot of people want to kind of roll the dice and see what they can do as far as being in the creative world. and not actually worked hard. I've had a lot of hard jobs in my life. I've been a roofer. I worked in steel construction, putting up steel beams and sitting on top of a beam and waiting for the crane to come down with a big metal, it's been so many years, I forgot what we called it. Basically attaching the bolts, and dangerous job, right? Outdoor job. This was back when I lived in Michigan, so we got laid off in the wintertime, which was kind of nice, getting like several months off. But it was also made it financially very unstable, right? Worked in an office, moved to California, started getting office jobs, got into finance. And most people want the cushy office job. They don't want the physically laborious jobs. And the same thing with the young people. A lot of people, they don't want to be an air conditioning repair person or a heating system repair person or a automobile mechanic. And by the way, mechanics almost have to be electrical engineers now. There's so many electrical components on these cars. It's almost not about the tools anymore. It's more about the diagnostics and just replacing entire parts when something goes out. And anyways, moving on here, folks. And let's go ahead and get into what China had basically responded to Walmart with. And this is how CNN put it here recently. China is turning up pressure on Walmart. That could mean higher prices for U.S. consumers. So basically, Walmart, what they wanted to do is use their size as leverage to try to convince China to basically eat these tariffs, to pay these tariffs, and therefore not have the extra cost of the tariffs be passed on to the consumer. And of course, Walmart, the number one retailer, the biggest retailer in the U.S., thought they could do that. Well, it's being reported that didn't go so well. And with these 20% tariffs now on imported goods from China and other countries, the strong reaction from Chinese government reveals how American companies are caught in the middle of an escalating trade war between the U.S. and China, while customers in the United States want low prices. That could be hard for Walmart to achieve if Chinese government is stepping in, trade experts say. Even if a company, even as strong as Walmart, struggles to hold down prices, it means much smaller companies are going to be hurting too. Chinese officials said this month that they requested local Walmart executives speak with them following a report that the company had asked some Chinese suppliers, including kitchenware and clothing suppliers, to lower prices by as much as 10% for each round of U.S. tariffs. Our relevant departments have reached out to Walmart to further understand the situation, and the company has provided an explanation. A spokesperson from the Commerce Ministry told the press in a recent meeting. So what are they saying with this headline? China's turning up the pressure. Well, what they're saying is China didn't immediately bend and say, okay, that's fine, we'll eat the tariffs. They're saying, not so fast. Let's talk about this. What do you mean? So we're going to see how this turns out, folks. But I have a feeling that China's not going to make it so easy for the U.S. consumer not to see higher prices. And I've said here on this channel, I think it's going to get much worse. Before it gets better, I think costs will go up. There are a few bright spots, though. We have the cost of eggs coming down. I haven't really noticed it much here in California, but nationally, I was seeing egg prices come down a bit. And here's how Z-Hedge put it. They're saying orange juice also came down pretty heavily in price. So these breakfast items. Prices for some of the most common breakfast foods have fallen over the past month, while attention's been focused on these countermeasures, which have helped arrest the rise in egg prices. Basically, we're importing a lot more eggs now. Orange juice prices are now on track to post their sharpest quarterly decline in almost 50 years. Bloomberg data shows that losses of 45% persist through the end of the month. The first quarter would mark the largest quarterly loss since the second quarter of 1967. That's pretty amazing. Bringing up a chart here for you guys. And this is a pretty big drop, boosting egg imports to reverse this bird flu situation where they were basically killing tens of millions of chickens that tanked the population. So now we've reversed that as far as how many chickens we're getting rid of, and boosting the imports led to this big decline in prices. We're now just under $3.50 a dozen on average, when we were close to $8 a dozen here recently. Also, we've got Costco out there now following in the footsteps of Walmart and negotiating with China, trying to get China to eat all of or most of these higher prices and absorb the cost of tariffs. The retail giants seeking price cuts as trade tensions escalate and imports costs rise. And these requests from both Walmart and Costco, these recently came under scrutiny from China's Ministry of Commerce after these price-cutting requests were made. During a meeting in Beijing, Chinese officials criticized Walmart for shifting the tariff burden onto Chinese suppliers while calling it unfair and irresponsible, according to the Wall Street Journal. And still on the topic of imports, we've been warned here recently that coffee drinkers are going to start paying a much higher price as the perfect storm of factors impacting global supply chains. And tariffs is just a part of that. And according to government data, in February, the average price of ground roast coffee rose to a record of $7.25 a pound. And the other big factor to these coffee prices besides tariffs was weather, severe weather, and crop destruction. All right, folks, so what's the bottom line here? Well, here's what I'm doing. I'm remaining very vigilant and cautious. I jumped back into a stock here a few days ago. I told you when the big drop happened in Tesla, I was going in on some stock. That's paid off very well. We're up pretty well. I think we're up at least, 30%? I'd have to go into that chart to get into it. So look for opportunities, folks. Look for companies that are stable, steady companies that see big drops. And what I do is I wait for those opportunities and buy the dip. Throughout the year 2024, I only did 7 trades. Ended up with a pretty good year. With your help here supporting me in this channel, it definitely helps your views, your comments, just being here, just supporting the channel by watching. So really appreciate it, everybody. Let me know your thoughts down in comments. The tariff situation, are you concerned about higher prices? Or is it a nothing burger because there's always going to be helicopter money coming in? Stimulus checks, we're still waiting for those dose checks. I don't know if those are ever going to be sent out. I'll be surprised if they do. Anyways, let me know what you think about any of this down in comments, folks. Please make sure you are subscribed. Keep this channel alive. Right here, I believe under my finger is where that button should be. As always, keep stacking. Bye for now. Peace.